This is the next chapter, Understanding Business Performance. The use and interpretation of quantitative business data to support, inform, and justify business decisions. Information from graphs and charts. Businesses will regularly use quantitative data to help them make more informed decisions. Examples of quantitative data include sales figures, the number of faulty products being produced on a production line, and staff retention information. Quantitative data can also relate to the external environment that a business operates within. For example, whether a market is growing or declining, the level of unemployment and exchange rate information. Quantitative data can easily be displayed in tables, graphs, and charts. This enables the user to interpret the data easily and identify trends. Financial data. There are many types of financial data that businesses can use to support, inform, and help them justify their business decisions. These include profit and loss, break even, cash flow, gross profit and gross profit margin, net profit and net profit margin, average rate of return. Marketing data, market data. The marketing data includes businesses' internal data such as data on sales figures, marketing spend, and primary market research. Marketing data is generally available through secondary market research and includes population information such as age distribution, income levels, and unemployment information, as well as whether a specific market is growing or is in decline. Market share is a common example of market data and measures the total sales of one business in relation to the total sales in a particular market. This calculation is expressed as a percentage. Many businesses aim to increase their market share so they have more power to set prices in the market and their brand names will become well known. The formula of market share is sales of the product divided by total market sales times 100. The use and limitations of financial information. Understanding business performance making decisions. Business managers need to review financial data to determine how well the business is performing. This will help business decision making. However, managers need to be aware of the limitations of using financial or marketing data. Market research data may be biased. The sample size may be too small and therefore unrepresentative of the whole population. This may lead to incorrect decisions being made. Managers should look to see who has drawn up the data. Is the data objective and realistic? Have staff been consulted when drawing up the figures? Often staff have insights into working practices that senior managers are unaware of, which may explain the reasons behind the figures. Break-even, cash flow forecast, ARR, linked to future figures. How realistic are these figures? The further ahead the business looks, the more uncertain the figures will be. Timescales. Some financial data may be out of date and therefore not useful in decision making. Comparisons should be made to previous figures, targets, or competitors. It will be difficult to understand performance of a business by looking at one figure in isolation. Data should be monitored over time or alongside other figures to allow managers to identify trends and make judgments about business performance. When reviewing the performance of a business, both quantitative and qualitative data should be reviewed by managers, owners, rather than just quantitative data. This will help to ensure the best decisions are made of the firm.